You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good morning, Jim.
Today we're going to be talking about the high risk of mining, and it just got riskier, and we're talking about investment-wise. We had that tailings pond in central BC collapse last week. Thankfully, not much heavy metal contamination. The water will be safe for humans, but the sediment probably will wipe out fish for years. And David, we know environmental concerns are always key for people when they have to develop a mine, and you say it used to take 8 years lead time to start a gold mine. Now it's 20, a whole generation.
It can be that long, Jim, in terms of the discovery to actual production process. Certainly 12 to 15 years is probably becoming the norm now. The topic we're dealing with today, I think, is an important one. I think it's underappreciated by people in the gold and silver market as well as base metals market, and that is what we call the mining footprint. It's what effect that a mining operation has from exploration through production and then eventually resolving the production land and going back to where it was before on the environment and the immediate and general environment. And mining is very heavily regulated today compared to what it was 10 or 15 years ago. And it's going to become even more regulated, and that's a good thing in a way. I mean, in terms of making sure that everybody does the very best they can to mitigate risks and to lessen the likelihood of failures like we saw with this tailings pond collapse that we saw last week. The point is it'll never be eliminated altogether, but it is going to mean that it'll be one more cost factor that will push up the price of gold and silver going forward, along with the demand pushing that supply, which will cause for higher prices as well, too. And so I think investors have to factor that in as an event, as an element that's always been there, but yet is going to become more important as we move forward.
Well, take a look at the Pascua Lama mine on the Chilean-Argentinian border. Environmental concerns there have kept that operation from getting underway. They thought they'd make, or it would cost maybe $5 billion to start this mine. Now they say it's going to be $11 billion before they even start producing.
It's pretty amazing, that figure. You just wonder how many ounces of gold and silver they have to dig to break even on that. That internal rate of return could be a long, long time. But I think you're going to see these questions being raised, and they're legitimate to a certain extent, on any operation, any new operation, anywhere in the globe. And so, as David Morgan has said for many years, everything we use is either grown or mined. And so, really, when people look at these things, they have to try to see some kind of balance, that there is a trade-off. If we're going to have the modern conveniences that we've come to depend on for our livelihood and even to stay alive sometimes, we're going to need to keep mining. We just need to keep mining as responsibly as possible. And you know, Steve Todoruk over at Sprott Thoughts penned an excellent column last week where he talked about that trade-off that you and I have been discussing this morning. And like he said, you know, there are new ways that are being developed that kind of a dry stacking process is one for these tailings ponds, which make it less likely that what we saw here last week in BC and also down in Sonora State in Mexico, where we had a copper concentrate spill down there, where these things are less likely to happen, and when they do, they'll be less damaging to the environment. And I also think people need to, maybe not everyone listening to this knows what a tailings pond is, so it might be appropriate to give a quick definition on that, Jim.
Well, go ahead, David. You're the expert.
Well, not an expert, but certainly a serious student. And a tailings pond is really where the residue from production goes, either from the flotation circuit that's used for gold and silver, or open pit mining that puts the product in a leach to leach out the minerals. It's where that residue is pumped into a pre-designed pit that has a impermeable layer on the bottom of it so that it doesn't leach into the ground. And that liquid residue then over time will evaporate out, and so leaving this residue behind. And it's usually highly treated so that it's not nearly as toxic as it was during the process itself. There still maintains a certain level of toxicity. And of course, if the tailings dam breaks, either through a lack of continual maintenance or due to earth shifting or something like this or a flood, it can create some pretty serious consequences. In Mexico, where I've been, in some of the hilly parts of central Mexico, where there really isn't much flat space, some of these tailings ponds, which over time have solidified and actually don't have any residue left at all that's liquid because the water is put back into the streams, in some cases that I've seen actually as pure or more so than what was taken out of the stream. These flat sections are covered with a little bit of earth and used as soccer playing fields, so they can actually serve a positive purpose. But the consideration here is that in an ongoing concern, you do have a continual residue being pumped into the tailings ponds, and so there's always a certain amount of liquid involved there. And that's why it's important to really keep an eye on things and make sure that there aren't any leaks or disruptions.
David, do we have to use tailings ponds? Can't they recover this slag or whatever it is left over from the process some other way?
For the most part, there's going to be some residue, and some of that residue has to do with simply the non-metal items that were in there in the first place. But it's going to be really difficult to actually eliminate that consideration. But there are processes that are being used. For example, there are certain bacteria that will actually consume metals that can make it much less toxic. So I'm thinking the long view would be to end up with a situation where, let's say you had a tailings pond which would be filled up at some point and then allowed to coalesce into solid ground and perhaps start a new one, so that you wouldn't have a pond that is maybe 20, 30, 40 years old, but one maybe that would be reconfigured every, say, 5 or 10 years, and that would certainly mitigate things as well, too. So, the mining sector is continually working to improve what they do, to make it more cost efficient, to make it safer. For example, to remove much less waste rock where it's being dug out of the ground and bring out more rich ore. And so these things continue to take place, but we're always going to see the occasional spill and disruption because, by definition, we're all fallible creatures in our pursuit, regardless of what that is.
What is happening with gold right now?
Jim, we're still trading in a broad trading range, and actually it's become quite narrow, and there are a couple of chart patterns, such as triangles, that are showing up, which indicate that we're going to see some kind of a resolution fairly soon here, one way or the other. And, of course, our bias is to the upside. We think the likelihood is that we'll see higher gold prices in a breakout pattern rather than lower, but we don't know for sure. And so each side has their own view as to what that's going to look like. But I think if you and I are having this discussion even a few weeks down the line, I think we're going to see a substantial difference in where the gold and silver are trading from where they are today. And our presumption is that that could well be to the upside. If it is to the downside, then we'll have more work to do in the base building before we see that movement. But we are entering into a seasonally strong period for the metals, and so that might be the way to bet for people.
And, of course, there's the assumption that sometime this fall there's going to be a major correction in the markets, but the markets haven't behaved the way we thought they would the last 2 years. So,
well, the markets are still holding up pretty well, and the Fed continues to pump a lot of money into these markets, so we'll see. But again, we're entering into the period of the September-October period where traditionally you see significant stock market corrections. So we'll just have to watch. And that's one of the things that I think is important is, we all have our views, but until Mr. Market gives us a definitive answer, it's best for us to watch and wait after we've established our positions and not keep adding just because something might happen, but literally wait for it to happen and then add more if it confirms your analyses.
Is palladium still going to be hot?
It looks like it. It made 13-year highs just a couple of days ago, punched above $900 briefly. So it would not be surprising to see it into 4 digits here well before the end of the year.
So there is some hope for metals after all, and this is the shining boy right now, isn't it?
It is. It's leading the charge. It's up something like 25% this year, and we've been pretty fortunate in our analyses to be correct in that, seeing that palladium and then platinum would lead the metals higher, and so far so good. So we'll just watch and see if our big picture premise plays out for us.
Is this mostly due to China deciding that they're going to put catalytic converters on their cars now?
I think it's due to a convergence of elements, Jim. We've got some very strong auto demand around the world. We have new uses being found for platinum and palladium. We have continual supply concerns out of South Africa and Russia, and we have just demand across the board for the PGM. So all of these things are pushing the supply-demand matrix into the direction of continual tight supplies and higher prices.
Thanks a lot for chatting with us, David.
You bet, Jim.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.